Welcome to the True Wealth Podcast, where we specialize in helping aspiring homeowners break into the real estate market and help investors create and build wealth through real estate. We will be sharing some of our best advice around real estate so you can purchase your first home or reduce taxes and achieve financial freedom. Your host, Seun Adeyemi, is a certified financial planner, mortgage professional. Financial freedom is possible when you have the right mindset, coaching, advice, and community. So, let's get real.
True Wealth Podcast. I'm your host, Seun Adeyemi. Today, I've got my friend and colleague, Chris Bisson, on the call today. Chris was on a few episodes ago talking about the appraisal process and what that looks like for a home buyer. But today, we're going to take a little bit of a different approach. We're just going to talk about the real estate market, what things are right now, what we're seeing, what the data is saying, and just how to make informed decisions in where the market is. We've seen a lot of fluctuations. We've seen high interest rate increases. The market is tepid right now. My other colleague, Othniel, will be joining us shortly, and he's going to give us a bit more information on what he's seeing in terms of the sales on the houses on the market and whatnot. But Chris also has some insight because part of the buying process often includes appraisals, and so he can tell and pull up a lot of data on what he's seeing in terms of what the prices of the houses being appraised are being listed for. Perfect timing for the
fire truck.
fire truck. But that's okay. Chris, how are you today?
I'm doing great. Thank you, Sean. I've seen a lot of interesting things over the last month since we chatted last.
Mm-hmm.
And one of the things I may have shared with you off camera last time or off mic last time was I had a conversation with a mortgage broker who does a fair amount of volume, like over $100 million worth of loans every year. And they told me that there was a large national, I'll call it national brand real estate office that in southwestern Ontario, one of their offices did not write one deal, not one, in the month of September, and they have over 85 agents. So,
Wow.
If that's a sign of things to come, I don't like it.
No, it's funny you're saying that because I think I know who you're talking about. Because I was listening to one of his podcasts recently. But I think we're all seeing it. Sales have dropped, refinances have dropped, a lot has changed. I think the interest rate hikes are working themselves through the market. And one of the things I always say, it's a lagging indicator because you don't necessarily see the effect of the increases on existing borrowers who are not renewing or buying. You see it more in the consumer demand for things like car loans or lines of credits that people use on the regular. But yeah, his story about August or even September having zero deals it's all across the board.
Yeah. And what's great about real estate is that it truly is a regional beast. So while people can read headlines about how bad things are nationally, or anecdotally, here's what's happening the national figures,
Mm-hmm.
those numbers often get skewed by what's happening in just a few very large markets. So, right, like Toronto, Greater Vancouver area, Montreal, Calgary, they all have a outsized impact on the national figures.
The national averages.
Yeah, like I think Toronto, you put Toronto and Vancouver together and it's something like 40% of the entire market, or maybe, give or take a few percent. But actually, I did some digging, and I wanted to see, how much truth is there around things like they're saying, in cottage country, it's seeing a really big pullback.
Mm-hmm.
And in cities where there's heavy automotive, what's happening in those markets. So I don't know if you want me to, if I can share a screen or not, but I could actually show you some
Yeah,
interesting stats
go ahead.
while I talk about it.
Yep, go ahead.
Is that okay? Yeah. Okay,
Yeah, for
cool.
those listening, you won't be able to see the visual, but if you want to hop onto our YouTube page, you see some of what we're talking about.
Okay. So um, the first one, we'll just talk a little bit about um, the Lakelands Association of Realtors, and that area covers everything from Blue Mountains, Collingwood, Meaford, Wasaga Beach, all the way across to like Huntsville, Muskoka Lakes, Lake of Bays, and Parry
Mm-hmm.
Sound. So it's quite a big area. So it covers all of that area, kind of up and around Georgian Bay, we'll call it. And so this isn't including Lindsay or the Peterborough area, but
Mm-hmm.
I think anecdotally it's probably going to be very similar. And what's happened there, I believe the numbers here back up what people are saying, and that is they're saying that people that sold their house in the city, moved up north, thinking they could work forever up there. They don't like driving into work twice a week or three times
Mm-hmm.
a week because most of them have been called back 2 or 3 days a week. So the figures that I'm looking at here tell me October over October previous year, there was essentially a massive decline in how many sales happen. And if you look at how low are they compared to the 10-year average, they're 40% below the 10-year average for the month of October.
Wow, that's a
Yeah,
big drop.
huge. And that's for non-waterfront properties. When you look at the waterfront properties, the unit sales are down 30, almost 31%. So obviously, waterfront is more desirable than non-waterfront, and that
Mm-hmm.
that could explain the difference. And this chart that I could show you that I've got up here shows like in the peak, the average sale price was about 1.2 million in that area,
Mm-hmm.
and and today it's 900,000,
That's
900, 925,000, like 300,000 different
wow.
practically. Yeah. So that's the cottage country um, piece, right? People are talking like cottage country is seeing a huge hit, and they're not kidding. It's true. Then if I flip to sort of the other side of the province, down in the south part of the province, Windsor. Windsor is seeing they're at 25% below the 10-year average in units sold.
Hmm.
Um, and their prices are at the peak 700 and say 10,000, and now the average is 525. So there's a big change in values from the peak there. And then just the last one, North Bay. North Bay has Elliott Lake in it, in that real estate area.
Mm-hmm.
So Elliott Lake, you probably have heard, has done really well over the years. They too are having, uh, they're looking at big decreases, like 24% below the 10-year average. But prices have fared not too bad. If you look at this, if it's coming through, you can see they're popping their way back up. But this could just be a factor of fewer sales, so you get one or two really expensive ones, and it impacts the average more than it would in a city like Toronto with thousands of sales a month. But right now, it looks like at the peak they were at 540, and today they're about 485 for the average sale price. So
One
I
of the
just
things I'm one of the things I've noticed, and even with the graphs you're showing here, is the run on the real estate market between 2020, the COVID era, to mid 2022 was very unhealthy. And what I'm seeing is that skewed the data completely, because you had massive year-over-year increase, which did not make any sense. And I remember I kept saying that, like, this price increases are very deceptive.
Mhm.
And so now things are coming back to closer to what they were pre-COVID in terms of year-over-year growth. But when you look at those graphs you showed there, you see this huge spike, 2020 to 2022, and then it starts coming back to what the numbers look like in early 2020 and prior to that. Maybe a little bit of increases, but if you bought a house at around COVID 2020, 2021, you need to sell that house, you're probably underwater now.
Yeah, I think all of our statistics say that if you bought in the last half of 2021
Mm-hmm.
or the first half of 2022, you're probably underwater. Meaning, if you got if you got a 90% mortgage, uh, you're probably underwater.
Yeah,
Definitely,
especially.
you definitely, if you bought in that time frame, the value is likely of the property is likely less today.
Mm-hmm. And like you said, it's even worse if you bought less than 20% down, which leaves you with a higher loan to value. And now that loan to value has shrunk even further. So even if you were in pain with the interest rate hikes and let's say you're on a variable rate and you decide, well, I think I got to sell this, it's going to be hard to pay the bank and even get any money out of it. I'm
Right.
looking at
You may owe less, or sorry, you may owe more than your property is worth.
more than the property's worth.
Yeah.
I saw a few pictures on Twitter, well X now. Prices are sold for properties are sold for 1.2 million, are selling for 900,000. How do you, if you bought that property at 1.2 million and you put in 20%, that means you put in about 200,000, give or take. Your mortgage is at 900 and change, and your property is worth 900. By the time you factor real estate fees and closing transactions, you're underwater. And I think that's also why, because the Canadian real estate market has, at least in the last few years, is a big portion of the Canadian GDP.
Mhm.
That's where we're seeing it flow through other sectors as well, because the Canadian real estate market contributes significantly to the Canadian economy,
Yeah.
and people are in pain.
Yeah. Yeah. In some markets, though, like I didn't bring up Calgary. Calgary's done quite well.
Mm-hmm.
So for the investors out there who are thinking, okay, where do I look? Um, it will be easy to get drawn towards a market like Calgary because
Mm-hmm.
they fared better. You just got to remember, real estate in Calgary is hugely impacted
Cyclical.
by oil prices.
Yeah.
And so not only do the interest rates impact real estate there, the oil prices do too. And I just suggest to people it's better to buy low than buy high. So
Mm-hmm.
if you see, if you were able to look at the graphs that I just shared, or you're able to go online, like CREA, the Canadian Real Estate Association, if you type in Google CREA stats, you'll actually get access to all the different board statistics out there that come out once a month on the 15th of every
Mm-hmm.
month. And you can see the price charts for all of the different regions. And my point in sharing that is, again, better to buy low than buy high. So if you feel like, hey, like prices are kind of hitting a bottom in certain places, obviously that's where you want to buy.
Mm-hmm.
And now we could talk about what kind of properties to buy, or how do you pick a real estate agent? Is that something you wanted to touch on today?
We can go into that in a quick second. But one of the
Sure.
things I even wanted to talk about with Calgary, for instance, is because it's cyclical, um, when buying, you have to be buying with an idea to hold for the long term. And like you rightfully said, you want to buy at, if prices are low, it's always better to buy low. But in places like Calgary, you're buying for cash flow, you're buying for cash flow, not capital appreciation. Because in the short term, you may see the capital appreciation because that's the only market right now that seems to have held up. But when oil prices change, that market often fluctuates a lot. If you're hoping to cash out at the end of it, you may find yourself in for a big surprise.
Mhm.
And so if you're going into a market like that, but mindful and be aware that you may not get the capital appreciation on the back end. But if you're buying low, then you're most likely your carrying costs are low. And if your carrying costs compared to your rental income is high, then it's a cash flow play, not a capital appreciation play. And so that's kind of what I want to throw out there. If you're looking at those markets as still doing well and still healthy, be cautious and make sure you have a balanced approach with looking at that.
Great idea. Yeah, I agree 100%. Far too many times people will buy thinking more like the buy and flip as
Mm-hmm.
opposed to buy and hold. And the truly wealthy people in the world are the ones that hang on to their assets. They have assets that make them money year over
Mm-hmm.
year, right?
Mm-hmm.
So whether it's money in the bank that earns interest or money in real estate that earns a regular perpetual almost return, um, that's where it's at in my opinion.
I was talking to a colleague, actually, it was on a previous podcast, and he was saying, I know a mentor that owns 20 properties. He's owned it for about 20 years, and they're all practically paid off. Now
Right.
that's a cash flow king because you've paid it down, you've held it up. If you sell, he's still gonna make profit. But the most of the profit has been because those properties have been held for a long period of time and he's paid down the mortgage. And so if he
Mhm.
wants to cash out, regardless of what the market is, he's still gonna be in the money. And because he's held it for that long, even if real estate dips, it's never gonna dip back to or even close to what he bought it for 20 years ago, right?
That is highly unlikely, isn't it?
It's
Very
that
unlikely.
unlikely.
Yeah.
So
Yeah.
talking about what markets are you, other than Calgary, let's even look at the types of properties, right? You mentioned that earlier. Types of properties to look out for, and then we can kind of go from there.
Sure. If you're talking about like what are some of the better types of properties to buy from a cash flow perspective, I've always found that like small multi-unit residential, so 2 to 4 units. For example, I have a fourplex, and I have other properties, and
Hmm.
more often than not, if you can have 2, 3, or 4 units in it, it's better than having um, 1 4 bedroom house,
Hmm.
4 1 bedroom units, for example. The value
Right.
you get out of it every month is higher
Hmm.
because a family can only afford so much.
That's
Now,
right.
the flip of that is maybe a student rental. And people have different thoughts on student rentals because they are more work, right? They are
Hmm.
definitely more work. You're often looking at regular turnover.
Turnover, correct.
Yeah, like it may not be every year. If you luck out and you find the right kids, they might be there for 3 years, but often they're there for 8 to 12 months. And but like I mean, where my son goes to school in Kingston, and a friend of mine, their boys there as well, and they're paying $1,000 a bedroom a month
Wow.
for a 7 bedroom house. So 7 grand, like $7,000 rent.
That's a real cash flow play.
Yeah. Now they're treating these properties almost like using the income approach to value, where you're taking the net income and dividing by a cap rate to come out with a value, which doesn't always line up with um, a direct comparison approach, like
Mm.
comparing it to a house for a family, essentially.
Right. Right.
But still, like those are great numbers. So if you can buy a property that fits well with that, and the cities is okay with it, because again, I don't know what the rules are there. I
Hmm.
can't say whether or not they even allow 7 unit rentals, because that's like a boarding house, right, or a rooming
Yeah.
house.
And I think one of the things an investor would need to look into in going that strategy like that is also finding a lender that would be willing to take boarding rooms. right?
Yeah.
And for those kind of properties, I often recommend it doesn't need to be anything super fancy because there's going to be high turnover. There's going to be it's going to be high maintenance, right? And so it doesn't have to be anything super fancy. It just needs to be really functional, safe for your tenants,
Hmm.
and you got to be able to secure the mortgage for it. There are lenders that do it, but that's a different niche in itself. Now, which markets are you seeing those types of multiple fourplex units, at least for reasonable prices?
Geez, that's a really good question. And there's probably, I can't answer that, unfortunately, without doing more research.
Hmm.
I can tell you that they are hard to find.
Mm.
They really are. There aren't that many properties that were purpose built as a fourplex or three, But what I've noticed a lot of, and this is pretty well everywhere, is that most cities are looking to increase density and they're allowing basement accessory apartments.
Hmm.
They're allowing mini homes to be put in backyards or in like laneway. You may have heard of the laneway home program in Toronto right now.
I actually
So
haven't heard about it.
yeah, so the city is essentially trying to help homeowners afford the homes. And so they're allowing them to build these mini homes where it's more like a bachelor apartment
Hmm.
with a bathroom that's connected to the sewers. Like it's a fully functional unit. But Toronto has a program for that. Most cities have programs for accessory, like basement apartments now. So if you've got an unfinished basement or a basement that can be renovated to have another unit, that's often a very inexpensive way to get yourself to a 2 unit rental.
Right. And so people are building these extra units like at the back where if they have the lot size or something like that, right?
Yeah, yeah. I can say I do live in Guelph, so I can say like Guelph has a pretty robust real estate market in the sense, sorry, rental market. There's not enough supply for the demand.
Mhm.
And there are quite a few homes been converted to having a second or third unit. That was a neat ring. What was that?
Sorry, I thought I put it on do not disturb, but it's like a call came in. But
Okay.
sorry, didn't mean to cut you off. We can
No,
keep.
you didn't, man. It's all good. Your listeners heard everything. Ah, all I
uh,
was saying was like Guelph does have a good bit of these types of properties. Any older city would. I just find that you got to go looking for them. They don't come up for sale that often because the people that have them, they like the
we won't
cash
let
flow.
them go.
Yeah,
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 those are probably more off-market deals. Um, if someone is trying to, if the seller's letting it go, they're probably not listing it right away. They're finding people within their markets to buy it who are interested.
yeah.
So you wanted to also talk about picking a realtor.
Oh, yeah. I just thought, it dawned on me like you've got a lot of customers who are investor customers, right?
Hmm.
You're a mortgage broker. You find people money. Um, and a lot of folks are maybe getting referred from some of your clients who want to get into this for the first time. And what I found in my travels, and I've been at this 25 years, is that not every real estate agent understands the rental market.
Mm.
And so one of my first questions with any real estate professional that wants to help me find something is how many rentals do you have?
Mm.
And maybe not everybody has one right now. Maybe they've owned several and they sold them off for whatever reason. Um, maybe they had become a student of the industry and they really know it, like they do know what they're talking about. But if the first question is, I don't own any, I've never owned any, or the answer to that question is, I've never owned,
Mhm.
and I don't own any now, then I'd have to press. I'd have to dig in and find out, what do they know?
Mm-hmm. Mm-hmm. I think that's informative from a standpoint that there's certain things you look for and you look out for when you're buying a rental versus when you're buying a home you're going to live in. And the advice of a realtor can be really handy when you're buying a rental property. And if all you've ever owned are homes you've lived in, you're probably a lot pickier. You probably want specific kind of finishes. There's certain things you're looking for. Whereas if you're buying a rental, you can't really go crazy with all the aesthetics that you would like to have because you're not the one living in that house.
Right.
So they may not take care of the house as well as you would. And so the things you ordinarily may want for where you live in, your tenants may not care, right?
That's right.
And
That,
so you've got to look at your bottom line when you're going into rental properties and whatnot.
well, that's the next thing, right? Do they understand the math?
That's right.
If they don't understand the math, of course, then that doesn't make a lot of sense. The other thing I do is part of my due diligence. So, for example, I recently had a conversation with someone about severing lots on a farm,
Mm,
and so it's a 100-acre farm, and we're looking to sever off 3 4-acre lots on the frontage. And the realtor said, absolutely no problem. I just had this proved and done somewhere else on the other side of town in the country. And then when you got down to the brass tacks of it, it's zoned agricultural. The county is not in a million years going to let it go until the provincial government changes
the
the,
regulations.
yeah, yeah, exactly. So it's prime agricultural land, and they are not in the business of killing that right now.
Mm,
So you still, even though your realtor tells you you can do something, it's a good idea to just double check, especially if this is your first couple of
hmm
transactions with that person. Because this person, for example, did it once in a different part of the county, and unfortunately, they made the assumption you could do the same thing on the north side of the city
Right.
versus the south side of the city.
So it's before you make that firm commitment to purchase on your purchase sale, it's a good idea to call the county, to call the municipality, and to see,
Right.
I have this land or I have this property I'm willing to do this for. That's not what it's zoned for right now. What are the chances that will get approved? What's the process like? How long is that going to take? Because
Yeah,
all of that is into your cost.
exactly. So the example I could use, somebody wanting to buy a place and shove a basement accessory apartment in it, or maybe make a third unit, or maybe split the lot and build another house next door to the house
Hmm.
that's already there, is just make the inquiry with the city and make sure you're on side, because it can be an expensive mistake.
Yeah. I mean, I know it's all about doing your due diligence, right? Also understand the specific market that you're looking to buy into and ensure that that actually fits the objective, like the agricultural land that he wanted to sever. Well, if you know what that market is looking for and what's going to be approved, then you can avoid that hassle from the get go.
Yeah. The other thing I'd suggest too is, if you have it in your mind you're going to rent to a specific type of person, whether it's, say, it's professionals or students,
Hmm.
you know that students want to be on a bus route. They don't want to walk too far to get to the bus route if they don't
Right.
have to. So you certainly wouldn't want to buy a house that's a 20-minute walk to the nearest bus route, type of a thing.
Right.
Um, or you wouldn't want to put them in a part of the city where the city is absolutely would be dead set against having a house full of kids, is all, right? Like, because like you're going to have trouble
Yeah.
potentially. You go to a nice subdivision, and then all of a sudden there's one house with 6 cars in the driveway next to other homes where there's 1 or 2 cars, a professional couple, all the way down the street, right?
Mhm.
Everybody's the same except for this one house. Well, you're going to end up having trouble.
Yeah,
So
yeah,
maybe you should buy in a different neighborhood. That's all.
yeah. No, that makes absolute sense. So right now, looking at where the market is,
Mhm.
what are you seeing any emerging trends in terms of um, requests you're getting for appraisals? Um,
Yeah, there's a couple of things that I think are worth sharing. One is for anybody that put a deal together, I'll say, on a new construction property at the end of December and early 2022 that's supposed to
mm,
close in the next little bit. You're probably going to have an appraisal that comes up short.
mm,
So you need to think about your plan B very seriously. And this is everywhere, Sean,
yeah,
everywhere across the country. So that's the first thing. And then the second thing is what we talked about at the beginning. There are fewer people buying right now. So if you want to sell something, you need to price it accordingly. But if you're interested in buying for the long term, now is a pretty
pretty
decent.
good time to buy now because you can get what you want, really.
That's right. You have a lot more options. There's many, many more listings that have hit the market compared to the last two
Hmm.
years. Like it's considered a buyer's market in many markets now, as
Hmm.
opposed to a seller's market. So for the first time in probably 10 years, I've heard there are markets like that are definitely buyer's markets. And you can get that information at the CREA website. So CRA, just type in CREA stats, and it'll come up as one of the top hits. And just check out for your real estate board or the ones that are within a 50 or 100-kilometer drive for you, and check that out because that's where you'll learn, does it make sense to buy in Hamilton versus Kitchener, or Ottawa versus Toronto,
Hmm.
etc. Yeah.
It's definitely a bias market. The challenge is it's a catch 22 because even though prices are listed much lower now, people's incomes they're about around the same. And so by the time you fact we as a mortgage broker, that's I'm working on a file right now where this client is buying a $350,000 condo, putting 20% down. So the mortgage is only like $280,000. But they need $90,000 income to qualify for that. For a
Right.
$280,000 mortgage, you need 90,000.
Right.
That that's unheard of, and that's really because of where interest rates are. And when we're qualifying you for a mortgage, we need to do the current rate plus 2%, which is a different story. Where I'm thinking the stress test when it was introduced a few years back, I think it was a great idea to help people make sure that if interest rates rise, you can qualify and you can still afford that property at
Mhm.
the new elevated interest rates. But I don't think the stress test does anybody any good now because now we're stress testing the mortgage at the average fixed 1 year fixed rate is about 6.8, 6.7 as of today,
I
where
know.
so
Almost.
exactly. So we're qualifying at close to 9%. Now, how realistic is that? Is it that that buyer will be servicing that mortgage at 9%? It's not realistic. So, in my opinion, I think the stress test has done its job, and I would advocate for it to be taken off. The
Mhm.
challenge, though, is where I say it's a catch 22 is you take off the stress test, and now that's probably going to elevate the housing market again
Mhm.
to
Yeah.
numbers
It'll
that are
overheat.
not sustainable. It may overheat the market.
Yeah.
And so maybe we find a middle point. Maybe instead of stress testing by 2%, we stress test by 1% or something.
Yeah.
I don't see the value in the stress test at this moment.
Yeah. I haven't given it that much thought, but I do like the idea of a gradual decrease from 2% more than the rate to the contract.
Exactly.
Maybe it's 1.75, then maybe it's 1.5, and it gradually over the course of
2
2 or
years.
3 years, it slowly
Exactly.
works its way out. Yeah, that makes more sense than just turning it off anyway at first glance to me.
Yeah.
So
So I mean that I would advocate for that. But going back, if you have really great income and qualifying for a mortgage is not a hassle, is not going to be a problem, this is the time to buy because prices are lower than you would expect. Prices are where they were probably closer to 2019 now in many markets,
mhm.
right? So,
Yeah, and I actually read an interesting book a long time ago. It was written by the folks over at Keller Williams, Gary Keller, and somebody else, and they showed just some very basic math. Like if you take a $1 million home and the values just say went down equally amongst all homes, so it went down 20%, so it's worth 800.
mhm,
And you take a house that was worth 800 and now it's worth 640, your loss on the 640 versus 8 is 160,000 versus the 200. So a good time to move up is actually when the values have come
have
down.
come
Because
down.
when it goes up, the new house you buy will increase by, if it goes up by a similar percentage. I mean, I don't know that that happens all the time, but it's an interesting perspective anyway, something for some of your investors to consider as well, who are your clients.
Another trend that I've started thinking more closely about is going into variable rates as opposed to fixed rates. Uh,
Oh, yeah,
right.
I could talk to you about that, but I'm not a mortgage broker. I don't have a license. I I I strongly believe that it's starting to make a lot of sense to go variable.
To go variable.
You think?
It didn't 6 months ago. It didn't a year ago because we knew rates were going to go up. And rates might still go up by another 25, 50 beeps over the next year. But I see rates coming down, if not late 2024, early 2025.
Hmm.
And so if you're locking in at the 5 year fix of right now, you're locking in at an elevated rate. If rates come down early 2025, even by 25 to 50 beeps, if you're on a variable rate, you ride that rate drop down. So it's I think variables makes a lot of sense now in today's market because the question is how much further are rates going to go up? It might go up, but I don't see it that 1%, 200 beeps increases we've seen over the last 2 years. So if you want to buy, I think those are things you want to consider. Before we wrap up, any further comments you wanted to add, Chris?
You know what? I just think this is a great service that you're giving your customers, Sean. It
Thank
really is. I mean, just for people to get the insights here on a bunch of different topics related to real estate is a great thing. I think the one last thing I would suggest, and we touched on it, is when you're doing your due diligence to pick somebody to help you buy
you.
property, and that really just goes with, I think everybody on the call, no matter who they're dealing with, wants to pick professionals that truly can help,
Hmm.
and to just ask, have two or three simple questions you ask your potential professionals, and then weigh out the answers. Let them know up front you're doing some research so nobody's offended, and they give you the straight up. And yeah, just do that little bit of research, because the little bit of research that you do up front pays dividends long after. And heck, if you find the right people, you'll have these relationships for 15,
Yep.
20, 30 years, right?
Yep.
So yeah, I think your listeners, by listening to this podcast, are doing something good by informing themselves, and just to make sure that they select professionals in all the different parts of their business.
Hmm.
So, and that goes down to even the plumbers that you use and the
Yep. The contractors.
electricians, like everybody, not just the money people.
Yeah. Yeah. It's all about building a good team and having a good ecosystem. I have a contractor I've used for probably 12 years now, and he's so good. I when we did a flip, he did his darn hardest to get me like the materials, everything, all within budget. And even my brother that I went in on the deal with was just amazed at how we were able to get it all done. But yeah, building a good team, interviewing a couple of people, having conversations, and do your research before you even meet with them so you know the kind of questions you want to ask. And if you need any help with guidance, reach out. Send us an email, send us a text, and we'll love to support you. We'll love to help you. Chris, thank you once again for coming on the call today. I enjoy having this conversation, and hopefully we'll be having another one in a few weeks again, just to see where things are.
All right, Sean. Excellent. You have a great day. Thank you.
You too. You've been listening to the True Wealth Podcast. Thank you for joining us, and that's all for today.
This is all the time we have for today. Thanks for listening to the True Wealth Podcast. Don't forget to rate, share, and subscribe to the True Wealth Podcast on your favorite podcast platform. Follow us on Instagram, Twitter, or Facebook at True Wealth Pod. We'd love to hear from you. Share your thoughts, ideas, and questions with us on our social media platforms or email us at podcast@truewealthadvisors.ca. And who knows, your question might be the subject of a future episode.